Well, g'day there traders. This is going to be the second and final analysis type video for this weekend. This is going back to a watch list which we regularly keep an eye on and have a look at sort of the broader type of market strength or weakness based on some additional stocks outside of our pro analysis watch list. Now, I've been very vocal in my analysis of the following shares. I've been speaking about a lot of bearish types of signals taking place across all of these stocks. We're starting to see the breakdown of these stocks, which has taken a little bit of time. I mean, it doesn't really matter where we start, but what I'll begin with Target. And as you can see, a lot of people have been taken off guard with this most recent bearish sell-off. However, if you know and understand technical signals, if you know what you're doing, you can see this coming an absolute mile away. Unfortunately for a lot of people who are long Target and have jumped into the exhaustion of this bullish trend, they are now heavily underwater. They're underwater on their long positions. Essentially, if they've got into them anytime after the breakout corresponding back to the 13th of March 2015, we have essentially erased the entire gains which have set up for about 3 to 4 weeks in 3 trading sessions. Here we are trading back down at $80. We're breaking out of this ascending wedge, which resolves itself to the downside in a very high probability. You can see the volume coming in on the sell side also. Target is looking very, very bearish. It's looking very, very exhausted. I have referenced over and over again in past videos, which are still public, the discussion on divergence, which is setting up on Target, which is also setting up on Starbucks, HD, and Disney. These are all signals which you need to pay attention to and which are starting to really break out. Again, please do not get swept up in, overly bullish sentiment, which is very, very strong out there in the markets at the moment. People are becoming complacent on the upside. It's as if these markets cannot sell off. When you find yourself in that boat with the majority, you really need to start analyzing from a different perspective and coming to conclusions of what is just around the corner. It's hard to do. It's hard to back yourself, but it's not hard to do. That's what is most important. I can teach this to anyone, and you're starting to see it translate to stocks. It's hard to give you a time frame on when this is going to happen, but if you're patient enough, you allow the technical signs to set up, you set your swing trades accordingly, you can make a lot of money swing trading the financial markets from a very passive type of way. It doesn't take a lot of time to set these trades up. That is Target in a nutshell. We've got Starbucks as well, which again is starting to roll over. You can see most recently we made a nice swing high in March. What we've done is we've bounced, but we have just established a lower swing high. You can see that. This is earnings, of course. Nice volume surge on this particular candle right here. We were breaking out, to all-time highs. It looked as if this stock was going to, at the time, about over $100 a share. It did go through that split most recently. Here we are trading at $47.16. What is most bearish about this is this little swing high right here. We've got a nice array of bearish candlesticks. It's even almost a sort of island reversal type of chart pattern. I'm not going to go out on a limb and say and call it for what it is right now, but it's really looking quite weak. If Starbucks begins to break below this trend line right here, it is in some form of a symmetrical triangle almost, or at least a little trend line right here. There's a very high probability that if we start breaking below about $46.23, I will give you a trade trigger on this particular one, or something to look at virtually at least. I mean, you can take this measured move right here and then project it from the breakout if it does occur, or even from here, and that'll give you your targets in the future. We do, however, have earnings on Starbucks. All right, we do have earnings coming out on the 23rd, it appears, of April, so please pay attention to that. It might not be enough time to get into a trade on Starbucks, but it's definitely looking weak. We'll see how earnings, of course, influences Starbucks, but just you have to be cautious at this particular moment in time, especially with this setup right here and the overall markets looking as they do. Have a look at HD also. We've been somewhat neutral. You know what? Actually, we haven't been somewhat neutral. Since this particular candle right here, we have tried to fill the gap. We've done that and we've failed to break out and continue a new swing high. We have failed once again and we've tried to rally. We have failed to set up another swing high. You can see that we have got essentially 3 relative swing highs, albeit a little bit slightly lower most recently, but we're sitting right on the neckline of what could be a bit of a terminal pattern. This candlestick right here, this movement right here, set it all up. It's what we call an exhaustion gap. And as such, it's taken an entire month since that pattern to start to see the weakness in HD. For all of the people who've gone long in this area, after this exhaustion gap, you are trapped. Unfortunately, right now, you're trapped and you're down on your swing trades. That's okay. We still haven't seen the ultimate breakdown. Volume is coming into HD. But at the moment, the only thing holding this stock up is that we are at support technically, and we're sitting right on that 50 exponential moving average also. Pay attention to HD. It's got a very good likelihood that it is going to start moving lower. And to conclude with, I'm not really going to reference Gilead, by the way, because it's been acting a little bit funky. We had this short trigger at 95.13. We came very close to it on this hammer candlestick at support. We've rallied, we've failed. And it's just not looking like a very nice trade at the moment. What I'd rather do is quickly speak and reference Disney, because Disney is setting up very, very similar to sort of HD. Now, we don't have the exhaustion gap, or almost more so similar to Starbucks in a way. We've got, the formings of this trend line coming up through here. We also have a declining higher high at the moment. We've got some nice silver volume, and the actual candlestick today is what we call the one black crow, a very, very bearish candlestick pattern. It's the second strongest bearish reversal type of candlestick we can see in the world of charting, and it's just got weakness written all over it. I've referenced divergence over and over again. You can go back and find these videos which I've posted maybe 3 weeks ago. The main thing which I want you to take away from it is that even though we haven't seen the rollover in the past 3 weeks, we've gone absolutely nowhere on these stocks. You can see this again. I can say this very, very humbly. You can see this a mile away if you know how to break down a chart. It may not make you money immediately in a trade setup, but it will definitely save you from getting into a trade that you don't want to get stuck in. That is a very humble thing to say, and it can save you a lot of money. Capital allocation, which you could miss out on if you don't have the capital, tied up in a stock which you can't get into in another trade, which is, a much nicer type of trade setup. So it may not, again, make you money immediately. It'll stop you from getting capital tied up in a trade which is going to do nothing, and therefore miss opportunities with other types of trades. So I'm going to leave it as that for Disney. Again, you can take this measured move and project it to get your target either lower or high if you want to remain bidirectional and as neutral as possible. But given the overall market movement, the market theme, again, I just can't find the conviction. I cannot find it within me to trade long at these levels on the markets. Trust me, I've been bullish on these markets for a very, very, very long time. Very rarely am I so easily bearish in many regards on the markets. It's taken time to set up, but right now, this would be the worst time to be looking at long trades on the market. I've made that very clear to my friends and traders, students in that pro analysis class. It's starting to play out right now. So have a look at that pro analysis workshop over the weekend. I'll leave it at that for this weekend market update, and having a look at those 4 particular stocks. We also reference all of these stocks on the left-hand screen right here in the 3 markets, of course. And we also take a look at gold. We have a look at silver. We have a look at the US dollar, or ticker symbol DX on Trade Navigator. And from time to time, we have a look at a few other interesting types of sentiment sort of indicators outside of the overall markets, which is very valuable at this particular moment in time. So thank you so much for your time. Have a great weekend, everybody. I'll see you all next week for additional market updates. But have a look at that pro analysis workshop as well, a great analysis class where you can learn a bunch, an absolute bunch, and also make money at the same time trading the US market. So have a great weekend. I'll catch you all later. Goodbye.